Hi guys, this is Harry Yodis. I've been a professional trader for 20 years now. Started way back in 2005 working for National Bank, and for the past 10 years I've been trading my own account. So let's get started. Big day, Thursday, this candle right here, December 18th. Okay. We're caught in the middle of options expiry. That's why it's options expiry, chop, chop, chop week in effect, okay? Yesterday we said that this big candle, we saw a lot of put buying intraday towards the bottom. And before here, last week, we saw a lot of calls, okay? So because of options expiry, the market makers want both puts and calls to expire worthless. So that's why you're going to get a lot of chop. And you see that in the intraday action both yesterday and today. Okay, but first, before we get to that, let's talk about the technical picture, because we always look at the S&P 500 and talk about the technicals, because market direction is the very first thing we look at as traders. It's very important. It's basically one way of having the wind at your back. Okay, there are many others, but first you want to know market direction. Technicals. Well, yesterday, if we pull up the moving averages, we said that this is the 50, the red one. We said that because we closed below the 50, we're in neutral. Okay, we're not bullish anymore. However, we suspected that this might be OpEx machinations in effect, and we could probably get right back above the 50, which we did. So now we're back to bullish. But this back and forth means that we're just covering, like getting a little bit of a pullback before going higher. Everybody yesterday saw the double top forming right here. 1, 2, right? So let's mark it so that everybody knows what we're talking about here. 1, 2, double top. Everybody saw that break below the 50. It's like everybody started going short at this point, and we talked about that yesterday. And we anticipated that would probably rebound quickly, okay? Because don't be fooled by price action. Price action, especially during certain times like OpEx, whatever, is there to fool you. Okay, you need to have the fundamentals on your side. This is going to become important when we talk about later on during this podcast. We'll talk later on about how price action can fool you. Okay, so first the technicals. Everybody went short here, and everybody went long here when it was a breakout. Let's get rid of these. You saw it. Rid of the double top. We all know it. And we know we're above the 50, so let's get rid of these moving average. So we're back to bullish. Okay, it's just typical OpEx week. Okay, but of course we don't just look at the technicals. We also look at the sentiment analysis. Fear and greed index, back to fear. Plenty of fuel to go higher. Everything is fear. Well, stock price strength, neutral. Now the put call option yesterday was at greed, and now one day fear. So everybody started buying. It just confirms that everybody started buying puts yesterday. Okay, so sentiment still fearful, and we also had the AAII investor sentiment survey, which I like better than the CNN fear and greed. It gives me a better picture, a better understanding. It's a little bit longer term in nature. Okay, so this week we had 44% bulls. The bulls are still there, but because the market went down, the bears increased. However, last time the market went down, the bears increased a lot. Now they're not. They went to like 40% bearish. Okay, now it just went from like 30 to 33%, which is nothing. It looks like the bulls are starting to become more solidified in their outlook towards the market. We want to see another month of more bulls, but bears going all the way down to here, maybe 20% or lower. Okay, we want to see extremes. We haven't seen that yet. This is why the bullishness of this chart is takes priority in my view. Okay, so the sentiment is still fairly. I mean, it's bullish, but we still have bears hanging out. So let's call it neutral. And the bullishness has not solidified to extreme yet. And putting it in terms of the fear and greed index, we haven't seen greed at all this whole time. Okay, we need to see greed and extreme greed before we start getting worried as bulls. Okay, so that's it for the sentiment analysis. So before we go on to the OpEx effect, we had a couple of macro events that were good today. We had the CPI, the core CPI came out at 2.6%. Okay, they were expecting 3%. So inflation is going down. This is very good for rate cuts. Okay, they're probably the chances for rate cuts probably increased after this. Okay, and another, which is good for our bullish case, and another important macro indicator that came out is initial claims, jobless claims. Okay, that came out at 224,000, and before it was 237. We got worried here when it spiked, but then back down. So this is telling us that people are not filing for unemployment. This plus the CPI going down means this is good news, good macro news going forward. So that adds to our bullish thesis. Okay, so good macro. I'm happy about that. Okay, so let's talk about the OpEx chop. Okay, let's go now and dig deeper into these two candles. Okay, by going into the 15-minute chart. Oh, big sun. Okay. This was yesterday. Let's mark it again. This was the beginning of yesterday. Here. And this is the beginning of today. This candle right here. Okay, we were talking about yesterday how this slow downward drift. Make it clear here. This is Thursday, and this is Wednesday, and this is today, Thursday. Look at the choppiness. Okay, we talked about the chop. Here we had a negative report. Everything was going down, and here we mentioned that this is probably a lot of puts being bought and market makers delta hedging. And this final put capitulation, this final sell-off was like a mini capitulation that we said in options, not in the market. Okay, and we suspected that this will get reversed during OpEx week. And yes, today look at this chop: up, down, up, down. This is very typical of option expiry, which means that all things being equal, barring everything else, unless we get some big major news tomorrow, okay, I suspect this to continue, this chop to continue. And let's get rid of these arrows again. This is evidence of OpEx week really playing out today. Okay, so let's go to the daily candles. Okay. So we mentioned before that here we had a lot of calls that were bought here. Let's open it up so you guys can see. Oops, same mistake as last time. Let's kill this. Let's open it up so you guys can see. This was a lot of calls were being bought. Okay, and here we suspected a lot of puts were bought, and we got confirmation with a put-call ratio when we saw it in the Fear and Greed Index. That, remember, this put-call ratio was at greed, and now it went to fear in one day. So it confirmed that a lot of puts, and you can tell, you can tell as the day was going that a lot of puts were bought. So for me, I think because OpEx week looks to be in effect, and barring any major news, I think the market closes around this area, around 680, maybe 682, this area right here, so that we can get both of these guys expiring worthless. And by the way, this is going to be a big OpEx because it's the final one of the year. So I suspect a lot of calls were bought here, a lot of puts were bought here, and they have to expire worthless. Okay, so now that you've seen that, let's get rid of these. Let's get rid of these drawings. We don't need them anymore, and it'll clear everything up. And the final puts here, they're going to be gone. Yes. Okay, so that's OpEx week, okay? But today, another big announcement came out for one of our stocks, okay? And that is Canopy Growth. Canopy Growth came out today. Remember the catalyst that we had here? Canopy Growth came out today, and it was bid in the market going all the way up to 237. It came out and Trump signed the executive order, and they're going to reschedule it to Schedule 3, okay? And then sell off, okay? We were talking before how price action during OpEx week and during certain times is, you shouldn't rely on it, okay? Especially in the shorter term. What you should care about is the fundamentals, okay? The price action doesn't really matter, okay? Fundamentals first, and then magically the price action starts to unfold, okay? So here we had a lot of short-term momentum, guys. We got the news, and this was a sell the news event, okay? However, I am still even more bullish on Canopy Growth because this is a longer term type of trade, okay? We don't care about the price action as much as we care about the fundamentals. And these are the fundamentals. You have to have a checklist, okay? You prepare a checklist of why you made this trade, and then you check it off as it's happening, or you mark a yes if it goes your way, or you mark a no. So for like the bankruptcy averted, yes, we averted bankruptcy with a previous report. We talked about that. Rescheduling, done, okay? So our fundamental thesis on CGC is getting better, okay? And the 7-year bear market, that remains to be seen, okay? We don't know. So we got what we wanted and the price went down. This is just short-term action. We don't care about that, okay? As long as our thesis is getting better, this stock will go up over time, okay? Because fundamentals create the charts, okay? The technicals come later, okay? And we said that because bankruptcy is averted, just that, it should be trading around the $3 range because this is bankruptcy levels. Look at that. This is stage one. It's been trading under $2 because it was going to go bankrupt. Since it's not going to go bankrupt anymore, it shouldn't trade around that level. So for me, it should trade around $3 just from the bankruptcy. Rescheduling, even higher. Rescheduling is a huge deal because it allows them to not be a cash business anymore. They can have bank accounts. They will pay less taxes because of certain loopholes. Okay, they don't have to buy Brinks trucks and haul their cash around. They don't have to have warehouses. All that disappears. So they're going to expand their margins just from that cost savings alone, okay, and on rescheduling. And it opens the market up for like more institutional ownership going forward. I mean, it's not complete legalization, but just that alone will maybe allow institutions to come into the game now since they don't have that stigma and they're allowed to, that stigma of like heroin Schedule 1 drug, and it allows them to make an investment in this space going forward. Okay, so these are the kind of trades that play out over time. This happened with the gold trade. Okay, the gold trade was the same for me. Okay, if you look at gold, okay, it actually didn't break out here. It broke out all. This was the breakout right here. Okay, this was the real breakout in gold. I don't know if you can see it. But this was breaking above 2,000 for the first time after years, since 2020. Okay, not even then, didn't even break out then. So this breakout in gold was the reason to be in the gold sector and where I went long in the gold sector. However, keep that in mind because this was, it broke out like in November, something like that, end of 2023, beginning 2024, okay? But if you look at the miners, GDX, at that same time. Let's say beginning 2024. Okay, look at GDX at beginning 2024. Here. This is beginning 2024 for the miners. Right here. They actually went down. It didn't even break the previous highs of 2020 until we got to 2023. April of 2025. The real breakout came in April of 2025, literally a year and a half later, okay? And then massive explosion, okay? So fundamentally, you had all the fundamentals for the gold miners on their side, but the market didn't recognize it. And for past stigmas, whatever, we don't know, it didn't materialize until way later. The fundamentals have to play out eventually, because that's what they are, fundamentals. You can't ignore them forever. And that's what I think will happen with CGC. It might take time, okay? We need to have this breakout above 2 and hold. But in the meantime, we have these momentum guys, day traders, momentum guys, selling out immediately on the news. Okay, we don't want that. We want to make the big money. We don't want to make small pennies day trading. We want to make big dollars, hundreds and thousands of dollars going forward as the market re-rates the wheat industry. Okay, so that's it, guys, for today. The 18th of Thursday, it's ChopX week. ChopX. Oops. ChopX week. I expect it to close around the 680 on tomorrow. Get rid of the call buyers and the put buyers, destroy them. The fear is still there in the sentiment. We have Still a lot of bulls lingering, although there are a lot of bears lingering, even though the bulls are overrepresented, let's say. But this is still not solidified. It has to go all the way down, which this confirms because we have to go to greed and extreme greed. So sentiment is still there for us bulls to take advantage of. As we go higher, I suspect the sentiment will go higher as well. Okay, we had the inflation rate 2.6% and the expected 3 down, very bullish. We had initial claims still within our range. Nobody's going filing for unemployment. The market is doing okay. And of course, Canopy Growth. So a lot happened today, and I expect it to continue tomorrow, and looking forward to not just tomorrow, but next week and into the new year as these markets progress. So if you like what you saw, guys, thanks for sticking by. Like and subscribe, and of course comment below, and I will get to your comments as soon as I can. So thank you very much and have a good day.